All right, guys, what is going on? What is Gucci gang? Hello. Welcome to the stream. It is Tuesday, August 27th, 2024. And what I'd like to do is follow up with yesterday, right? Follow up with some of the things that we talked about yesterday. And I want to continue the beginner series with this live stream as well, instead of just videos. I think that would kind of spice things up. And make the free course a lot longer too, which is cool. But yeah, we got a lot to talk about. We got a lot to discuss. So I am going to keep my eye on Nasdaq here. I think there could be trailing stops at 19,577, and we'll have to give that time to see if that will come to fruition. But at the same time, Dow has some highs, so it might not come to fruition. So there's some conflicting information here, and because of that, I will not live trade this. Okay. So there you go, right off the rip. There you have it. Okay, we have highs on Dow. We have lows on Nasdaq. So it's hard for me to say which one is which. Like, am I more confident going long or short? We're trying to long the laggard or short the leader, and that's toast either way. You're toast either way. So I would rather just not, you know. So did you guys see that in the chat earlier? I'll share it for the world to see. Look at that shit, dude. Look at that. That's a real selfie, by the way. That is a real selfie with my coffee this morning. Right? Missed my entry. Look how close that is, dog. Look how that is, like, by the hair of one of my beards. That is so one of my beard hairs. That is like so close, dude. And then we take off. Now, we actually did run up here, by the way. This was taken earlier, but bro, it utterly and disgustingly took off. And look at that, 48, right there at 48 too. Hit that, dude. Without me. So I'm feeling a little bit salty today, Chad. I'm feeling a little bit salty. That'd have been some shmoney, dog. That'd have been some good shmoney. So I feel like, with that being said, I feel like with what we've been presented with for the PM session, I feel like if I do something here, it'll be almost like revenge trading, and that's not what you want to do. So, but we will watch Nasdaq though. So if we fly higher, I'll be wrong. I think if we are going to trade lower, it probably should do it now and not continue higher. So we'll watch it. We'll see. But again, just to make sure that we're all on the same page, I am not live trading this. I'm not taking a live trade here. Okay. So full disclosure. All right. So there's that. What's good, Naruto, Ricky, Maximiliano? Welcome back from vacation. We got a lot more people on here too. We only had like, I don't know how many we had yesterday, but it wasn't 50 though. I did take off some. Welcome back, Libright. I did take off some of the stoic tags, so that might push us in front of more traders. So we'll see. What's good? AC from Germany, Flacco, Felix, Willow, Lucas, Jose, Edgar, Convicted Capitalist, Shay, Millie, Graberg, Natasha. Yeah, sometimes you miss being in front of the charts. Sometimes you're in front of the charts and still miss like I did. So that's always nice. Not really. What's good, Toby? Amin, 2020, Carlos, Stephanie, Eli, Big James. Praying on high today around this time of day almost all the time. What's good, Bruce? Did I miss anybody? Stephanie, Lee Bright, Donkey, what up? Today I predicted price just like John and missed the trade just like John. Damn, Lee Bright, bro. We gotta go put in our applications, bro. we gotta go submit applications, man. We have to go to McDonald's or some shit. Small, medium, or large? What type of drink? So yeah, it's been a while, dude. It's been a while since I wore that headset. But sometimes you miss trades. So let me start recording this before I start bullshitting more. Let me actually go back to, I don't know which one to record because they're both like fucked. They're both fucked. All right, so yeah, chat. What did we talk about yesterday? We talked about like 5 or 6 different things yesterday, which in this video series is going to be the previous video. This one's going to be number 8, I think, episode 8, which is a follow-up of episode 7, which was yesterday's live stream for the live viewers. What are some of the things that we discussed yesterday? Actually, you know what? I will open the chat today because we got a lot of people on here. So I want to give a chance to anybody who's not a member yet to ask their questions or comment or whatever they want to do. And my phone's kind of blown up too. But I guess that happens when you're probably, when you're this accurate, yeah, people are going to blow up your phone. That's how it is. And your social media. All right. So we talked about low resistant and high resistant what, Felix? Libright says how to find targets, understanding manipulation. Jose said the 3 candle formation. I think you're referring to the imbalance, but that's fine. I'll allow it. What's good, Jonas? Lee Bright said the 1, 2, 3 candle formation. Yeah, I think I did say that one time or twice. Target 19.7 on CFDs and indices. Yeah, I mean, if the Nasdaq is not going to go lower, it's probably going to go higher. So, but our current high a day, though, I don't like. Just personally, because we came up for these lows. I mean, excuse me, we came up for the highs, right? And this could be reaccumulation to go higher. But it's just with the lows are so clean. They're too clean. So I feel like we could trade down in there for that. How to find the gap on Dow. 3 pillars to trading. Imbalance model. Low resistant liquidity runs. Thank you, Naruto. All right. So yes, we talked about low resistant highs, low resistant lows, equal highs, equal lows, and high resistant highs and high resistant lows. Okay? What's good, George? Now, using the things that I taught you yesterday, we'll go back to ES. Using those things, okay? Now, most of you in the Discord, you already know what I'm going to post, okay? But what are some things that you can see from London up to equities open, which is here? Right there. There's your equities open. And I'm going to make that a good point too when we talk about a little bit more logic stuff. Because it's not just imbalances. It's not just mitigations. Or it's not just inversions. Timing is important. And I don't know if I took this off yesterday, and if I did, I didn't mean to. But in most of the recordings, there is my watermark. What happened to my watermarks? My time price one. Oh, trading views on that dog shit again. They got rid of my time price one. Trading view. I don't even want to talk about it. Anyway, I'll have to add that later, but time, price, context. Okay, you need all three. But what can you tell me about this segment of price? Everything in this blue shaded area. And London was actually like right here. So I can just, matter of fact, I'll just highlight that too. Okay, London. What does London do? We rally. What are these? We trade lower, retracement, and then we trade lower, overall lower going into equities open. Right? So what are these up here? What are these up here? And it's real easy. The easiest way to do it, you can look at the bodies too, but especially, okay, when the wicks, all right, we like to see wicks that are lower. So we have a high right here, and the high on the right is slightly lower. Remember, we discussed that throughout this series. I've been discussing this for many, many years, but for those of you that are brand new in the beginner series, right, the high on the right is slightly lower. So there you have it. Now we have a low, we have a lower low, and then what's going on right here? Zoom in, because I said to look at all of it. Okay, so what's going on right here? We have a low, and then we have a what? Is that a higher low or a lower low? That's a lower low, because the low on the right is lower. You see that? So if I were to use the magnet tool, that's going to be a lower low. But I like to do the straight lines because it shows me that the market dipped below that, right? So now using the information, again, that I gave you in the last video, episode 7, or for the live viewers right now, this was yesterday's stream. Using that logic, right? I told you that if I'm looking for a target, what's it going to be? It's going to be one of 4 things. Low resistant highs, or low resistant lows, or equal highs, or equal lows. Do we have equal lows? No. Do we have low resistant lows? No. Do we have high resistant highs? No. What do we have? Low resistant highs. Right? So there's kind of a process of elimination there. Right? Very elementary. You remember in school when you would take a test and you came across a question and it was A, B, C, D, right? And then you were like, well, I don't fucking know the answer. But like maybe C was an answer to a different question. So you're like, oh, well, it can't be C. So it's got to be A, B, or D. And then you're like, well, maybe it's not A. And then, so now you may not know the answer, but it's 50-50. It could be B, it could be D. But now I got a 50-50. So then we just, you know, now you're a little bit better, right? But we don't do that here. We're not going for it. Well, 50-50. We're not going for that. We're going for, it's one of these. It's one of the 4, right? So now using the horizontal array, which I told you in one of the other videos, right? That's one of the trading view walkthrough video. I told you the horizontal array, it extends that line all the way to the right. No matter how much you move your chart around. Okay. So we can label this, and you'll see this in the screenshots, and even the one I sent you, broski, you'll see that here. What does it say? It says London's high, or London high, one of the two, something like that. Okay. So, note-taking moment. I don't know if I've said this in previous videos or not, but I'll say it here just to make sure. When you have a high probability target, low resistant highs, equal highs, low resistant lows, equal lows. When you have that, and it's also a session high or a session low, oof, that's the chef kiss emoji, okay? So if you're taking notes, you can put that in there, the chef kiss emoji. We have that, by the way. I think we do. We haven't used that in a while. You can drop in the chat if you want. We have the chef's kiss emoji. Or whatever it's called, okay? When you have a session high, because that's London, right? The high of London is low resistant highs. Ooh. Ooh. You know where the market's going, baby. You know where it's going, right? That was a target. What about the lows? Remember I said if I have high resistant lows, that's usually where my stop loss is going. Not always. There's a way to make it smaller. But if you're a beginner, I'm not trying to tell you how to trade with a 2-point stop and a fucking 20-point take profit, okay? I'm not trying to do that. That'll come later on. But for now, I told you that my stops can sometimes go to the low, right? So just based on that, right? Now we're getting a rally here. What do you think the market's going to do? Is it more likely, think about probabilities, okay? Nothing's guaranteed. It's guaranteed you're going to fucking lose trades. Yes, that's the only thing I can guarantee you. Everything else is not that, okay? So what are the probabilities? Are we more likely to go higher or are we more likely to go lower? Higher. We retrace, okay? And then run for London's high. Price action is so hard, right? It's so difficult. The markets are random. Nobody knows where the shit is going. Sorry, I'm trying not to curse in the videos. I'm not going back to edit that though, so we'll just have to leave it in there. So, if you're a parent with kids, I'm sorry. I have a problem, okay? But there it is, okay? We retraced, rallied higher. Now, I missed it. I already told you that. And I'm going to leave that in the video too, just to show you that I'm human and I miss trades. And I told you you would do that. Remember in yesterday's video at the end, I was saying, yeah, you're going to see setups and then you're going to miss it and you're going to bitch because you're like, oh man, well, you know, this is $50 a point, man. That's a 20-point move. I missed out on $1,000. Man, I missed $1,000 move. This is bullshit. I told you would miss trades. I told you that. I missed trades too. And apparently Lee Bright said he missed it too. So we all just, we're asked today, okay? But I'm going to tell you why. Okay? I'm going to tell you what I missed and what Lee Bright missed and what anybody else missed it this morning because it didn't trade into this imbalance. Okay? Now, I'm not trying to be all spooky on you, but I'm going to counsel you to go back and listen to the time frames I told you to look at. Now, I told the chat yesterday, but I sent you a message yesterday, and I said stick to the daily, the 1 hour, the 15, the 5, and the 1. Those are your time frames. No 2-minute, no 3-minute, no 12-minute, no none of that. Right? Now, this is a 5-minute time frame. Okay? What I missed, if we cycle through, we can go to the 1 hour, but typically on a 1 hour, when equities is open, you're not going to see a lot because, you know, a 1 hour candlestick is 60 1-minute candles. So you're going to get a lot more information on a 1-minute time frame than you would on a 1 hour time frame just looking at equities. Now, if you want to go to the 1 hour to look over to the left, you have Monday's low that was swept here. So if you want to add that on your chart, you can, right? Because what does that make? High resistant lows. Hold on a second. Wait a minute. I thought you said These were low, high resistant lows. They are. You have it's doubly, as as Robert Greene would like to say. You have high resistant lows on the 1 minute / 5 minute, but when you zoom out, it created high resistant lows at high resistant lows on a higher time frame. So now these together too make high resistant lows. So you have doubly high resistant lows. So that's kind of cool. But now, sticking on the 15 minute. We were at the 5. We're on the 15 now. We looked at the 1 hour just to get a broader perspective, and that was this low here, which is previous day's low. And for the gold snipers in here, you know what that means, right? And I don't think we hit a measured move, so I'll just move past that. Analyze the same movement that we already saw. We looked at it on a 5 minute. We didn't look at it on a 15 minute. Okay? And this is where some of you might need new draws after this. When we traded lower and retraced to go lower, what did we trade into? We had traded into this imbalance. Right? 3 candle formation on the way lower. That price respected, even though it traded at the high end of it, still respected that to go lower. We have one right here too. All right. So what did I miss, Lee Bright? What did I miss, Lee Bright? And it's raining, so if the power goes out, the stream will cut off. The imbalance before the manipulation on the 15-minute time frame. So that's why I kept my green box on here. Did you notice that? See that green box here? That is what that's what I wanted. That's what I had my order at, was that green box. But do you see why I didn't get filled, basically? I mean, there's probably more justification, but at a minimum, I missed that on a 15-minute. It respected it here to go lower. You see that? This up candle, it digs into that. And then at 8:30, we ran lower for the lows, or for the previous lows, sorry, that manipulation. So this had some respect to a degree. Then we traded through it here. We closed within it. But then 9 o'clock, we traded through it. So technically that 9:15 was an NCE, was the next candle entry to go higher. And so that retracement, that's why I didn't get filled, because I asked for too much. I didn't know it at the time. I didn't know it. But at the time, that's why. It was too much. The market was like, nah, screw you, John. I'm not doing it. Okay? And then we got our move. So, just to reiterate, we talked a little bit about imbalances. Okay? Now, one thing I did want to make a point was the timing. Okay? Now, this might be a separate clip if I decide to make it, but if not, it's fine. All right? Why is timing important? 8:30 is when the stock exchange opens. So I have that labeled as equities open. And if you think back to earlier in this free series, I did a video, right? The introduction to smart money concepts. And I gave you like the imbalance. I gave you the mitigation. I gave you premium discount, which we should talk about that too. And then I gave you the opening price logic. And what did I say? I said the best longs are going to be below the open or close to it. And that was here. Okay. Now, one thing about logic too. All right. I'm going to give you something brand new today. Again, for the beginner series, not for the gold snipers. You know this already. But I'm going to give something to you brand new. Okay. When you have a range, and this is what I mean. When I'm looking at a range, I am drawing the high to my target. That's my target, right? I'm going to draw the high from there, and I'm going to draw the low end of either the Gann box or the Fibonacci retracement tool. I'm going to draw the low from the manipulation. Okay. Now this is real easy, and it's going to change the game for you, as it did for pretty much most of you guys. You will notice there's only one level on the Gann box. There's only one level. And that level is the halfway point. Okay. It also known as the 50%. Or if you want to be real technical, you could say fair value. But why say fair value when 50% is good enough? Okay. This is the part that is a game changer for you, or it will be for you. Price, to me, this is my opinion, okay? And the way that I understand price action is price shows a willingness, a strong willingness to trade above these highs when it crosses 50%, okay? Crosses 50%. It does not have to close above 50%. As long as it crosses from, let's say, if that level is 5628.5, okay, which again is just this high to this low, cut in half. You could even do that in a calculator. You don't need to, but if you want to, you can. All it has to do is go to 28.75. It just has to go one tick past 50% at a minimum. And that is an indication that it's likely going to trade up here. Okay. So it crosses 50% at 850. And remember that 15-minute time frame, it digs a little bit higher and higher, and then it trades lower into that 15-minute inversion. You remember that video, the premium discount, right? What did we do? Or what did the image that I showed you, what did it look like? There was two. And the first one I showed you was what? That 50% and below that is considered a discount. Remember that? And 50% and above is considered a premium. Okay? How do we know what imbalance to use? Well, there's a lot more to it than just the logic, my friend. But if you want a word to write down, you can write down location. Location. This imbalance right here that, again, was created on the way lower. Where is this imbalance located in relevance to the range? The imbalance is right here. Okay, and we're gonna make it purple because I usually do the purple box for the inverted imbalance. Okay. Oh shit. See, that's why the magnet tool is important. So you make sure you get it on there, right? This inverted imbalance is where it's in the discount end of the range. So this is a discount imbalance to go long, right? Because again, with yesterday's video, I'm targeting low resistance highs. You already know that. That was in your notes before that even formed. Because remember, that was all yesterday. These low resistance highs formed in London, right? And I said that's usually a target of mine. It's a very good target. Now you see why. Look at all these up candles in here. When you want to be long, You want to see the market go up, right? Well, imagine going long and then the market just easily goes your direction and then easily makes you money. It's good trading. It's some of the best trades you'll ever take. It's some of the easiest trades you'll ever take. I say it like that because I made a video on that already. Right? Because this is what? Oh, yeah, John. Oh, yeah. Oh, shit. You're right. We crossed 50%. So this makes the second leg. Oh, shit. That's not beginner shit, but I'm trying to make beginner videos, but also, you know, cater to the people that want the advanced stuff as well. So that was also the second leg model too. You guys catch that? Did you guys catch that? Consolidation, distribution, manipulation, manipulation, accumulation, reaccumulation for the highs. So there's your market maker buy model. Damn. You see how all this lines up, baby? It all lines up and all tells you the same shit. It all tells you the same thing. Man, John, I got stopped out prematurely. I got a video on that too. Stop loss placement when it comes to the models, right? Dude, you tell me an area of trading I haven't covered. I've covered all this shit. Okay? All of it. But anyway, let me just make my point. Okay? You don't have to worry about the models, the market maker models. You don't got to worry about that yet. The framework, as we like to call it. You don't have to worry about that yet. The whole point of me showing you was this. From your target to the low, what you're paying attention to is you're paying attention to 50%. Has it been crossed? Yes or no? It's real easy. Yes or no? If it has crossed, okay? If it has crossed, that's good. But the ideal longs are going to be below it. So you see how it crosses it and then dips back into discount before running higher. That's what buying low, selling high means. Would you buy above old highs? No, 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 no. No, 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 no. After a very strong run, 20, 30, I don't know how many points that is. 36 point, maybe 40, right? 35, 40 points on the upside. Are you going to buy above old highs? Absolutely not. Absolutely not. But could you buy, say, below 50% after manipulation on the way to opposing liquidity? Oh, fuck yeah. What about YM? Oh, look at that. Look at that. That magical orange box kind of worked. For a brief amount of time. It was a very large box here. And like, this was just dog shit. But nonetheless, it's running for the highs. It's running that way, at least. It's on the way, okay? Which, you know, this, I mean, look at that. That just looks awful, you know? It just looks bad to me. But anyway, let me go back to my point. Timing is important, okay? So now you have the 50%, okay? So now you have your premium discount. You know how it works, right? Because in the video, I just said, yeah, you know, there's premium discount, and then there's even, you can divide that even further, okay? You don't need to do all that, but crossing 50% is very, very important, all right? Now, the next thing I'm going to tell you when it comes to timing, and this is, I trade indices the most, but this is applicable to everything else. All right. In the last video, the one that was an hour and a half, part 7. Okay. At the very end of it, I told you this was a rigged game. You're not supposed to be here. I'm not supposed to be here. None of us are. And everything is manipulated. Gold's manipulated the most, but it's all manipulated. Okay. How can you use that information? That information by itself won't tell you much. It'll tell you the truth, but it won't tell you, it doesn't give you anything that you could go into the charts with and say, okay, well, all right, John, I understand the markets are manipulated, but that still doesn't tell me where to buy and sell. Right. Okay. Now, most of my students know this already, but I want to make sure all the beginners start to understand this. When you look at this price action, okay, between 8:30, that's this first down candle right here. When you look at that and then move, over to the right, right? Because time is linear. It only goes, we don't print left, but we can only print to the right as time goes on. When the market, okay, when it traded up to the highs up here, okay, what I want you to study, and I'm talking to you like I'm talking to my friend, okay? What I want you to study is not just like what the cool buying opportunities were or what the inversions were or all that kind of shit. What I also want you to study is how we got there. Let me lighten this up a little bit. Okay? Before the market goes higher, okay? Before the market goes higher, it almost always, meaning majority of the time, okay, it will go lower first. So what I mean is if you have opening price, okay, you have opening price. I can't draw this straight. Oh well. It will go lower before going higher. Okay? So if you, and it's real simple, you could just draw a simple starting point, like let's say opening price, OP, opening price. If it's going to go higher, it's going to go lower first before going up. Okay? Now the inverse is the same. If it's going to go lower, it will typically go higher first. All right. So it's very simple, very easy. Okay. None of this stuff is all that difficult. The difficult part is putting it all together and then managing your risk and not doing stupid shit between all the good trades. Okay. That's the hard part. And if the chat, you disagree, you can tell me what the hard part about trading is in the chat. I'll be open to suggestions, but yeah, matter of fact, let me do that. Chat, what do you think the hardest part about trading is? Or the hardest part about technical analysis? Let me know in the chat. I want to see what you guys say. But these are usually the predominant scenarios. If we go higher, like if you're expecting a bullish day, expect manipulation lower first. If you're anticipating a bearish day or a bearish session, you can anticipate a move higher before going lower. And I know the drawings aren't all that great, but I'm not trying to be super perfect here. I'm trying to give you the logic and understanding of what price does before it does it. Okay. I have to make this one green. Right? Very simple, very easy. Lower before higher or higher before lower. Usually. It won't always happen like this, but usually. Waiting, discipline, patience, waiting, trusting myself, patience, waiting, patience, trust. Yeah, see? I thought so. Now, with this idea in mind, okay? Because the morning session was bullish, right? For Nasdaq and ES, Dow Jones was trash. I don't even want to. It's just garbage. Okay? Look at now, let's come back. Look at our equities open. What did the market do first? It opened, right? And then it went lower before going higher. That is one of the main reasons why I told you that my stop will typically go to the high resistant lows, right? Because the market is unlikely to trade there again. It's unlikely to trade there again. if you notice, what's our current low of the day, right? This is where price action is at today. We're much higher than where we opened. The low of the day is down here, right? And price at no other time today went below this low. It never did. It may have retraced multiple times, but it never went back to this low. And it's, you know, we're trading higher, right? That's why I feel comfortable placing my stop at the low or a little bit higher. And again, I'm not going to go into that today, but if it's manipulation, it's not going to go down there again. So you're